Good afternoon and welcome to everyone on the Q3 and 9 months FY24 earning call for Venus Pipes and Tubes Limited. I have been joined by Mr. Dhruv Patel, our full-time director, Mr. Kunal Bubna, CFO, and SGA, our investor relation advisor. We have uploaded our Q3 and 9 months FY24 investor presentation on stock exchanges and company's website, and I hope you had an opportunity to go through the same. Today, I am proud to announce our company's robust quarter and 9 months performance for FY24. Revenues for Q3 FY24 stood at record high of rupees 207.1 crore, witnessing a growth of 52.2 with EBITDA margin standing at 18.9% for the quarter as compared to 12.9 in Q3 FY23. PAT for the quarter stood at rupees 23.3 crore, witnessing a growth of 106% on year-on-year basis. On 9 monthly basis, revenues stood at rupees 578.1 crore, surpassing our FY23 revenues by 5%. Similarly, margin stood at 17.5% compared to 12.6% for same period last year. The robust performance is on the back of multiple factors. Firstly, revenue contribution from high margin seamless pipe increased to 56% of our total revenues for the quarter from 45% for the same period last year. On the back of our backward integration, providing us an edge over our competitors, and additionally, anti-dumping duties on seamless pipe and mother hollow pipes, adding in heightened demand from organized players with high quality products offering. Secondly, export contribution increased to 17% of revenues from rupees 1.4 crore in Q3 FY24 to rupees 35.2 crore in Q3 FY24. This comes as a result of multiple things. Despite our relatively short operating history in the overseas market, the company has successfully forged a solid reputation, establishing itself as a trusted player in the export market. Backward integration of the seamless pipe has allowed us to make inroads with full potential in European market. We are also in constant talk to increase our presence across US, Africa and Middle East, and we are confident to increase our exports basket and diversify to newer geographies. We have also appointed senior marketing representative for these regions. Our goal is to replicate the success we have seen in Europe and extend our brand presence in USA, Africa and Middle East. This performance is a mark of our unwavering commitment to innovation, quality and customer satisfaction, along with integration of technologies. Domestically also, there has been a notable upswing in demand, resulting in increased inquiries and new order wins, resulting in increasing market share for the company. This trend underscores the sustained confidence customers place in our offering. Collectively, these factors signify a robust phase of growth and increasing opportunities within the domestic market. With the wide array of opportunity present in front of us, we plan to maximize on the same by increasing our geographical presence by building network and relationships and provide quality products to our clients in the domestic market as well. Expansion of market share by increasing our product SKUs and further diversifying across sectors such as oil and gas, pharma, food processing, power, effluent lines and railways. Actively assessing the demand outlook and scaling up capacities as needed with a focus on achieving economies of scale. Prioritizing digitalization and technology integration, recognizing their pivotal role in fostering growth and enhancing operational efficiency within the company. Committing to sustainable practice, we will be installing 1.3 megawatt solar power system at our plant to reduce our environmental footprint. To give a few updates for the quarter, on the seamless front, following the successful completion of our capacity expansion in May 2023, I am delighted to announce that we have rapidly ramped up the operation and currently operating at an 80% capacity utilization. This achievement stands as a testament to the efficiency and effectiveness of our execution capabilities and quality of our product. Further anticipating high demand for seamless pipe, we had announced capacity expansion of 4,000 MT MTA per month, out of which 2,000 metric ton per month of seamless pipe commenced operation in Q3 FY24, and remaining 2,000 metric ton per month of capacity is set to commence in the Q4 FY24. With this, our total seamless pipe capacity will reach to 40,400 metric ton per annum by Q4 FY24. Lastly, I am happy to announce that we have received approval from leading oil and gas player in India and Middle East. This achievement is a result of our advanced capabilities in manufacturing higher diameter welded pipe. Being one of the select few in the industry with such capacity, we are confident in anticipating a significant uptick in demand and subsequent order inflow for welded pipe in the coming periods. These approvals are a testament to our quality offering and will help us increase our geographical and sector outreach. Looking ahead, there is a robust sustained demand expected for stainless steel pipes and tubes across various end user industries. As industries undergo expansion and modernization, the need for durable and high performance materials become paramount, further driving the demand for stainless steel. The path of growth for Venus Pipe Tubes is robust, and we actively strive to broaden our influence across various sectors. Our commitment to a prosperous future is characterized by the continuous expansion of our portfolio in terms of products, clients, and geographical presence. This strategic approach is designed to fortify our foothold in every industry we serve, driven by the potent combination of enthusiasm and determination. We are committed to building a robust, diversified foundation that propels us towards sustainable excellence. Now I will hand over the call to Mr. Kunal Bubna to take you through the operation and financial highlights for the quarter.
Good afternoon, everyone, and a very warm welcome to our earnings conference call. We take absolute pride in announcing that your company has reported highest ever quarterly revenue, EBITDA and PAT for Q3 FY24. On the revenue front, revenue from operation for Q3 FY24 stood at rupees 207.1 crore as compared to rupees 136.1 crore in Q3 FY23, a growth of 52% Y-on-Y basis. Revenue for operation for 9 months FY24 stood at rupees 578.1 crore as compared to rupees 376.1 crore during 9 months FY23, achieving a growth of 54% Y-on-Y basis. Our revenue has grown by 52% and 54% for Q3 and for 9 months respectively, despite softening of RM prices compared to previous period. If we compare on volume front, volume growth on welded pipe was more than 50%. For seamless, volume growth stood at more than 100% on Y-on-Y basis. Revenue bifurcation for the quarter was 41% from welded, 56% from seamless pipe, and 3% from other sales. Growth in the seamless segment was around 89% on Y-on-Y basis. Welded segment registered a growth of 39% for Q3 FY24 on Y-on-Y basis in terms of revenue. Our export sales stood at rupees 35.2 crore for the quarter compared to rupees 1.4 crores during the same period last year. On the gross profit side, gross profit for Q3 FY24 stood at rupees 60.6 crore as compared to 26.9 crore in Q3 FY23, a growth of 125.5% on Y-on-Y basis. On the EBITDA front, EBITDA for the quarter stood at rupees 39.1 crore as compared to rupees 17.5 crore for the same period last year, registering a stellar growth of 123% with EBITDA margin at 18.9%. EBITDA for 9 months FY24 is rupees 101.2 crore as compared to rupees 47.5 crore 9 months FY23, a year-on-year growth of 113%. PAT for 9 months FY24 is rupees 60.9 crore versus rupees 30.8 crore in 9 months FY23, a growth of 98% on Y-on-Y basis. The margin for the 9 months FY24 stood at 10.5% compared to 8.2% in 9 months FY23. PAT for the quarter stands at rupees 23.3 crore as compared to rupees 11.3 crore in the same period last year and rupees 20.3 crore in Q2 FY24, a growth of 106.6 Y-on-Y and 14.8 on Q-on-Q basis. This strong performance adds another players to our competitive advantage. With solid financial capability, we are well equipped to weather challenges, invest in growth initiatives, and strategically position itself for market leadership. With this, I would like to open the floor for Q&A round.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dhruv Jain from Ambit Capital. Please go ahead.
Thank you for the opportunity, and congratulations team for a good set of numbers. But I had two questions. So one was around the margin. So we've obviously seen a very good performance on the margin side. But when do we start seeing sort of a peaking, right? So do you think that there is more scope for margin expansion from these levels onwards, or do you think that it will remain in the same range? That was my first question. Thanks.
Yeah, on the as we deal with two products, welded and seamless. So on the side of seamless, we have been achieving the required margin what we were targeting for this financial year, for this quarter. So I believe definitely it should be in this range bound, but the intent is to definitely to pick from here also, because if you see for seamless, it was around 20 to 25% of export in this quarter standalone basis. For on the side of seamless, wherein the margin what we are earning is likely 3 to 5% higher as compared to the domestic direct sale earning. So I believe that is driving those margins, and for that we will the intent is to keep this margin intact and increase a bit. And on the side of welded, I think as more and more higher sizes come into play going onward with also another capacity getting more utilized in the process, a bit of increase on margin side would be there on the side of welded.
Okay. And sir, with respect to the exports, right, obviously now we've come to a substantial level in terms of revenue contribution. But still, I think on the stockist side, there is a 27% contribution still there. So when do you start seeing that the stockist contribution starts to reduce substantially from here? So say, I'm just trying to guess that in 2 years, how will your mix of volumes start to look like?
Yeah, if you see from FY23 or earlier year, the percentage of stockage had been definitely decreasing. But I believe the intent is to keep it around 20% going forward. So I think in the coming financial year, we will be able to see those range bound number from the share of stockage and trader.
Okay. And sir, if you could just spell out your utilization number for this quarter. Thanks.
Yeah, it was basically on the side of seamless, it was around 85%, you can say, and on the side of welded, all the capacity taken together, it was in the range of 55, 57, 60% in the middle of that.
Okay. Thank you so much. All the best.
Thank you. The next question is from the line of Sneha Talreja from Nuvama. Please go ahead.
Good afternoon, sir, and congratulations on a great set of numbers. My questions are more pertaining on the exports front. Given the ongoing Red Sea, impact, are you seeing anything with respect to, exports? Are you materially facing any issues with respect to your supply, or is it still on the healthy curve?
Yes, basically those happened in the fag end of December only. So we were not much affected in the last quarter because of that. But again, also there is an effect on the size of a bit of freight cost, but there are mixed bag of order. We have FO and CI both type of order. So, but I think that the volume and other, I believe it will be intact what we are targeting for this quarter also. Bit of price effects are there on the side of freight, but that is also very marginal.
Understood. And given the strong trajectory that you're seeing, strong demand, and you have also highlighted certain customer approvals that you've been getting, what's the target on the export front? Like, what could be your export share in the next 2 years?
It is at least we're targeting it should be at least 20% of our total revenue, and whatever beyond that we achieve will always be our intent to achieve more than that.
Understood. And any significant margin difference that you're enjoying today in exports versus domestic market?
Yeah, now we have been seeing keeping our presence getting more in export side, we are able to get a margin of 3 to 5% higher as compared to what we sell in domestic side.
Understood. Thanks a lot, and all the very best. I'll get back in the queue.
Thank you. The next question is from the line of Kunal Kothari from Centrum Broking. Please go ahead.
Yeah, thank you for the opportunity and congratulations for a great set of numbers. So my first question is on the overall market outlook. How you see the realization paved in quarter three on sequential basis as well as on a year-on-year basis, and what is the outlook for the next quarter as well?
Yeah. Basically, if you see on the pricing side, on the side of welded, there has been a decrease on the price by around, you can say, 12 to 15%. And on the side of stainless, there has not been much decrease, but it was there of 3 to 5%. And see, if you compare Q on Q basis, it was marginally same, not much effect was there on Q on Q basis. But if I compare 9 months, this 9 months with last FY23, so 3 to 5% in case of stainless and around 12 to 15% on the side of welded, there has been a decrease. But I believe this should be maintained going forward also. There should be much, keeping the current scenario, it looks it should be pan out in this fashion only.
Does the price decline is related to any demand pressure, or what reasons do you see that there has been sharp decline in price?
Kunalji, we can say कि almost it's the international market only. The price of the other raw material is also decreased. That's why price is decreased in the market. Or there is a slow in demand in the chemical sector only mainly. In other sector, because since Venus has started Venus now has capability to manufacture all type of products, so we got the new approval also. So this year we have increased the market share in other than chemical also. Till last year our more focus was in the chemical sector, so this year we started to develop the new sector.
Okay. And what will be the current order book in hand and bifurcation towards the exports order book as well?
Hello.
Yeah.
Hello. We have an order book of 230 crore, and the export is around 20% of that.
Okay. Sir, lastly, want to understand similarly on our overall revenue share that towards stockists and traders. So if I compare on a year-on-year basis, we have increased from nearly 40 crores to 56 crores. So that is a tremendous growth that we are seeing over there. I of course believe that compared to direct sales and exports, the margins will be quite lower to them. Despite the growth towards the stockists and traders has been quite healthy. So what is the reason that we are not able to reduce our dependence on stockists and move towards the direct sales?
Kunalji, we are developing since almost we have done the capacity expansion of the 3 times of the earlier capacity, or we have increased the sizes and SKUs in all variety in the stainless steel pipe segment. So we are pursuing with the customers because for the almost new sizes and to target the new customers, we require that because our product is used in the critical operation, so we require the approvals from the clients also. So we are pursuing, our marketing team and our technical team is pursuing with all the companies to get the approval. So overall basis in the volume terms, we are increasing our share for the direct end user. But in the personal term, we are almost equal level since our capacity has been increased substantially. So we can see in the next coming 2 quarters, it will also go down.
Okay, so is it safe to say that incremental volume growth that we will be having will be towards the direct sales and exports driven only?
Yes, Kunalji.
Okay. And what could be the margin difference? Can you also state that?
See, when we sell to stockists and traders, the margins are slightly low by 2 to 4%, you can say. But there are few orders also where you also getting good rates also as compared to what you earn in direct sales, because we are able to cherry pick the orders with traders, stockists, and also on direct client base. So that way we counter those effects.
Okay, sir. Thank you so much. That's it from us.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Shobit Singhal from Anand Rathi. Please go ahead.
Yeah. Thank you, and congratulations on a good set of numbers, sir. So I have a couple of questions. So one with respect to the welded pipe. So we have seen a very strong growth in the seamless side. So welded pipe, if I see last 5 quarters, average growth was just around 6%. So when do we expect it to ramp up to around 80-85% utilization levels?
Yeah, basically, see, we have been receiving approval, as we said, from some of the leading oil and gas company, also from few of the overseas clients. So that utilization level will definitely increase with each quarter to come. So I believe the next quarter would be incremental from what we have achieved for this quarter, or roughly 55 to 57%. And there will be increment in the next quarter, and I believe from the next financial year, those higher percentage should come into play, and each quarter would be having incremental utilization on the side of welded.
Okay. And so now our 400 metric tons per annum seamless capacity will be fully operational by Q4. So what will be the incremental CapEx that we would be incurring? And can you give any color on the new client addition that we have seen in this quarter?
There had been, mentioning a specific name, slightly competitive, but oil and gas we have added in pharmaceutical, we have added in chemical, we have added in engineering, we have added in paint. So there are mixed bag of sectors wherein the client addition has been done. And I think, post this completion of all this CapEx in this end of this FY24, from the next year, I believe there would be CapEx which will drive us a higher double-digit growth on the side of capacity. That should be in the range bound of, you can say, around 40 to 50 crore each year for the coming year, basically.
Okay. And last question, sir, if you can give the sector-wise breakup. So just wanted to understand how a percentage sales in the oil and gas or the other premium product category industry has increased year-on-year basis, or if we are still in the same kind of tonnage basis on those industries.
See, chemical and engineering are definitely the predominant sector where we catered, but the sector which has increased their contribution is basically paint, you can say, pharmaceutical, power industry, a bit of oil and gas. So these are the few sectors, and railway a bit. So these are the few sectors which is added as compared to the earlier sector which were there.
Okay. Thank you, sir.
Thank you. The next question is from the line of Vikas Singh from Phillip Capital. Please go ahead.
Good afternoon, sir, and congratulations on a very good set of numbers. Sir, I just wanted to understand, once all of your expansion plan is completed and properly ramped up, what kind of the margins you are targeting?
See, as we said, for the seamless side, it is basically we were running around 60 to 63 rupees per kg in the FY23 target, and that is the intent. It will be more than 50% incremental on the side of seamless, and on the side of welded, which was 37-38 rupees, we target around 15-70% incremental on the side of welded. So that is the margin target for the going year for welded and seamless.
Understood, sir. Sir, also I wanted to understand our capital allocation policy, because this year we are almost will be completed with one of these sharpest capex plan. So next year, as of now, we have just a small plan for the also mill. So how are we going to utilize the cash? Because next year our cash flow generation would also be incrementally better.
Yeah, see, basically, there are two things in it. One would be the capex requirement, what I have said, in the range of 40 to 50 crore, and second would be increase turnover will lead to increase deployment of working capital. So what we see, there will be healthy cash flow, but I believe both the things taken together, the working capital and the increased capex, can easily be made from this internal source accruals part being generated. So the intent is to keep those accruals towards this working capital and capex requirement to be met.
Understood. So just one last question in terms of the capability side. Have, with these facilities coming in, have we covered almost all of the seamless steel capabilities, or there are certain areas where we can work on and can further announce some capex? Basically, we are still importing certain premium goods from the foreign market. So any idea whether you all want to go in that side, or by when we expect us to announce CapEx on those sides?
See, basically the intent were very clear to be making CapEx towards high margin products going forward. So there are few sectors wherein there are specific grades of pipe required. There are some special grade of pipe also being manufactured, what we currently don't do, both on the side of welded and seamless. So the intent is to to make those announcements going forward, wherein we can serve to specific sectors wherein those demands are there, where higher margins are there, also to manufacture specific grades of pipes which we don't manufacture or which we import. So definitely those intents are there, and going forward, the expansion would be more centric towards higher margin products.
Nothing finalized as of yet, right?
Yeah, definitely there are, but it is not, it won't be right to announce it currently. We are working on that.
Okay. So lastly, what is our made to order percentage in overall sales?
It will be around 80%. More than 80%.
Okay. More than 80% is made to order, basically.
Yes.
Thank you, sir.
Thank you.
That's all from my side.
The next question is from the line of Sahil Sanghvi from Monarch Network Capital. Please go ahead.
Yeah. Hi, am I audible?
Yes, you are audible.
First of all, congratulations for delivering what you have guided, and very good margin performance also. My first question was, so when you say 80% utilization in seamless, would that be on the 12,000 capacity, or would that be on 14,400?
It will be on 12,000. For next year?
Current utilization for seamless.
Yeah, it would be on the capacity as and when those are coming. On that basis, I am telling it is around 82 to 85%.
Okay, because we have commissioned that 200 tons per month.
Yeah, it include that 200 ton also, which had come lately in the quarter. It include that also.
So 80% on that, right? That
Yes.
included. Okay. My second question is, how do you expect the working capital, maybe the cash conversion cycle of working capital requirements to move forward? Because what happens is that our cash flow from operations still appear quite weak. I understand most of it is utilized in working capital, but now, since last 2 years we had quite a steep ramp up in our volumes also. Next year, do you see some easing in the requirement of working capital? Can we expect some higher cash flow from operations? How do you expect that to?
Definitely, you're rightly to say next year there would be a good amount of cash generation from the operation. And see, there won't be much capex, and definitely last 2-3 years there was capex, there was increase all sides. But I believe coming FY25, and I think even if you see FY26, there would be a healthy cash flow generation from the operation. So which will be a marginally used toward definitely towards this capacity expansion, but which is not very high number, nor it is in 3-digit numbers. So apart from that, that balance leftover can easily be used for this working capital requirement for the business, and I don't feel there would be much issue in utilizing this, and there will be not much challenge on the side of cash flow also going forward with this healthy profit coming into the business.
Right. And would you be able to tell us the debt number as of December?
Roughly in the range of 155 CR.
Okay. Thank you. Congratulations on all the best.
Thank you. The next question is from the line of Bhargav from Ambit Asset Management. Please go ahead.
Yeah, hi, good afternoon team. And congrats on the good set of numbers. Yeah. Sir, in the presentation, it is mentioned that Europe is already seeing good business, and future growth on the exports will come from Middle East, Africa, and US. Now, given that you are focusing on these new markets, why are we guiding that exports will only remain about 20% of overall revenue and not increase?
See, definitely, yeah.
Yeah, definitely it will go more than that. But for at least for the next 2 quarters, we are targeting our exports will be between the range of 20%. But in the long run, if you say for the 4 to 6 quarters, so definitely it will go up, because for the developing a new market in the export, requires the approval process of the plant as well as the client approval. So that takes almost time to, we can say, 5 to 6 months. So right now for next 2 quarters, we are targeting almost 20%, but definitely in export side, you can see growth in the next, after the 3-4 quarter, definitely you see the growth, more growth.
Yeah, so sir, if we take, say, a 2 to 3 year view, is it fair to say that exports can reach closer to about 35-40%, or that is a far-fetched number?
Bhargavji, we are targeting, but right now we can't much say about that. Once our project will be approved in the coming quarters for the US market and Middle East market, then we can further say how much we can achieve, Bhargavji.
And so these will be altogether new customers that we are targeting, or it could be the same company having a manufacturing operation in US or Africa?
Almost new customers we are targeting. Because in the almost mostly right now we are targeting our export in the territory of the Europe only, or the Europe clients. It doesn't have the much presence in the Africa, Middle East, or we can say in US. So all will be new customers.
Okay. Secondly, sir, you mentioned on the export side you make higher margins. So is it because the sector mix in domestic is different from the sector mix in exports, or is it that the margins are only higher on the export side?
The margin is basically only higher when we sell in those territories where we are currently selling.
Okay. So the mix is broadly similar, chemical, engineering, across exports?
In case of export, currently we don't sell to end-to-end industry. We are selling to trader, distributors, or stockists of Europe.
Okay.
They in turn sell to the industries.
Okay. And lastly, sir, you mentioned about 155 crores of debt on the balance sheet. Do we have any milestone by when we want to become debt-free, or it is too early given the high growth phase we are in?
The endeavor will always be to be a debt-free company. But see, it's not, if you see, compare my debt equity and other issues, not a very high debt, or it's a 10 years debt, you can say. So intent is always to get it, but it's a growing company. The volumes and value of sales both are increasing multifold. So requirement of working capital would be there in the business. So, but the target will always be sooner become a debt-free company, but it will take some time, I believe.
And this working capital side on the stockist, I presume, would be higher as compared to on the direct business, right?
So if you see stockist and trader in India, that's not high basically, because they in fact lower tenure as compared to when you sell to end industries.
Acha. Okay. So so should we work with 100 to 120 days of working capital cycle as compared to about 135 days?
110 days of working. You're right.
Okay. Great. Thank you very much, and all the very best.
Thank you. The next question is from the line of Karan from Swan Capital. Please go ahead.
Thank you for the opportunity. I'd like to congratulate the management on the stellar numbers they posted. So our company has, so my first question is, so our company has aggressively been expanding its seamless facility over the last few quarters. And we've also spoken about how the anti-dumping duty on Chinese-made seamless pipes, introduction of BIS, export incentives which have been withdrawn by the Chinese government has impacted the supply of seamless pipes in India. So my question is, if anti-dumping duty or the BIS provisions were to be withdrawn and Chinese-made seamless pipes were to flood the market again, how would this affect our company?
See, definitely the anti-dumping is there for 5 years, so I don't see any reason for it getting withdrawn. But see, the intent of our company is to be supplying to a varied number of sectors, so right to supplying our good to pan-India and also supplying to the various parts of the world. That's why we are so when we have been successfully increasing our sector, we are successfully increasing our presence throughout India, and we have been successfully able to win on the part of the world front also. So, and also to keep on adding the right number of sizes, the right number of grades of pipe what we can cater. Also, as you can see in case of welded, we can manufacture up to 56 inch dia, which only few manufacturers in the country can do. So we are trying to make ourselves a company which can serve the majority of the garment required for SS category of welded pipes and tubes and seamless pipes and tubes. So that if any chance some type of government policy or something changes, we are very negligibly affected by this. We become a unique company which can be differentiated from any other company which are there operating in the country.
All right, sir. And my second question is, you mentioned that Ratnamani and Jindal Saw are your competitors. Now, we are in an industry where in stainless steel pipes, there's not much of product differentiation. So what stops our customers to go to them?
Can you repeat? I'm unable to take it.
I'm sorry, I'll just repeat again. So you mentioned earlier that, there's Ratnamani, there's Jindal Saw who are our competitors. And we are in an industry where in stainless steel pipes, there's not much of product differentiation. So, what stops our customers to not take from us and go to them?
See, everybody has their capacity constraint, be Ratnamani, be Jindal Saw, or be one. And there is a demand in the market from export, from internal, and there are a lot of smaller players also operating in this zone. So you always have a leeway to capture those smaller players who are operating in the market. There are increased towards sectors. There are number of sectors like railway, paint, and other sectors which we were earlier not catching. Now we are catching. And see, so the customer has to come to. It can't be restricted to one or two because if everybody comes to me, I will be having my delivery constraint or my capacity constraint. So it will be mixed bag always. I feel so. I won't be that much affected by two or three of the competitors.
All right, sir. Thank you so much and all the very best.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Harsh Mulchandani from Chris PMS. Please go ahead.
Yes, sir. Thank you. First of all, congratulations on great set of numbers. Always, we've seen your performance is bang on. Wanted to understand a bit more on the export front. While it's good to have diversified geographies, but why don't we double down in Europe and, get a higher market share because we already have an entry over there? This is my first question. And the second question is, what is the key breakthrough for us which, we can look to achieve in markets like US, Middle East and Africa? Like the backward integration was a key enabler for us in Europe. So what would be the key enablers for these newer locations which we are targeting?
See, the intent on the side of export, it's not, you can't fix yourself to any specific sector or any specific geography. The better the price you get, the better you shift towards that. So that is the intent basically. So definitely if the prices are, we keep on getting a higher prices, you can see a higher volume growth on the side of Europe also as compared to what we have achieved in this quarter. So the intent is to cherry pick those orders wherein the margins and capabilities are coming on a higher side. And see, definitely Europe, the backward integration was the key to increase on the front of Europe. But other part of the country, be Middle East, be US and other Africa or other location what we target, see, it will be number of SKU what we can serve will definitely help us to penetrate that. That will be one of the factors, supplying the quality product and getting and having the requisite qualification to qualify for all those zones.
Got it. Makes sense. Just one follow-up question. Our market share would be negligible in Europe currently, right?
Right.
Got it. Okay, perfect. Thank you so much. Yes, sir.
Thank you. The next question is from the line of Pallav Agarwal from Antique Stock Broking Limited. Please go ahead. Mr. Pallav Agarwal?
Yeah, hello. Sorry, yeah.
Yes.
So I had a question on the other income. So this quarter, it was higher than significantly higher than the previous quarter. So any particular reason for this, and is this sustainable for the quarters going ahead?
A slight bit of basically exchange gain and all, not much majority, not much about.
Sure. Also, just on a question on the competitive scenario, because we've heard of, Man Industries also, probably venturing into the stainless steel pipe segment. We also, we've also seen Welspun Specialty also ramping up their production of both seamless tubes and bars as well. And there was recently news that Shah Metallics also acquired, Mittal Corporation. So, what's the broader view on the competitive landscape going ahead?
Right now, Pallavi, right now we have heard about the MAN industry. Definitely, MAN industry is expanding their capacity, but MAN industry will be expanding their capacity only in the seamless pipe segment, or they are putting up the extrusion mill, which is a very high capex intensive industry. So in the seamless front, definitely competition will be there. But due to anti-dumping, still there is a lot of, we can say, demand in the seamless front. There is a good demand in India or in the international also. The seamless pipe from India is well accepted in the almost in Europe market, in other market also. Or almost all the stockists and other players prefer to buy from India, but due to lack of capacity, they are not able to buy from India. Or if any other player will come, the usage of the stainless steel also growing. But if any new industry will comes in this line of SS pipe, then again the question of the approval will also arise, because to set up the plant and after approval there is a long journey. If any new player is coming, so definitely they will take time, or by the we can say next 2 to 3 years, Venus will be in different position or will be an established player in the SS pipe industry, or we will able to get almost all the approvals in the coming years. So Venus will be, or our focus is to develop the core or critical product. We want to go in the critical product where high margin is there. So we are target in next 2-3 years we will develop the good product where we can get the consistent order, we can get the fixed buyers for the product.
Sure. So, and also you could just, throw some light on the US, duty. So we are targeting the US market, and a couple of other players also are, doing the same, high margin products in the US. So what is the current level of anti-dumping duties and tariff barriers that are there in the US right now?
Yeah. In US there is a two type of duty. In the welded front there is some AD and CVD is almost 13%, which is applicable all the suppliers from the internationally, or especially they have some 25% special duty under section 232 for all the imports coming from the all over the world. So in the welded, because there is because in the 25% duty of the section 232, some of the traders get the benefit in the seamless front, because there is not much capacity of the seamless pipe manufacturing in US. So they are getting exemption for the supply from the India. Normally they apply to the ministry in the USA, they got the exclusion for the duty stricter. So in the seamless pipe, there is a good demand in US, or same in welded front. Due to their local manufacturers, after paying duty from the Indian product, whatever we supply from the India, our product completely cheap compared to the US producer.
But just on the nutshell basis, if you see section 32 tariff is there on majority of the country which export to USA. But there are specific AD and all which are there significantly high in China, and also there are some section 301 duty in China, so which make Indian good quite competitive as compared to China in US. Hello. Yeah. Hello.
Yes, sir.
Yeah.
Sir, Pallav's line has got disconnected.
I think that. No worry.
Yes.
I'm on the call?
Yes.
Yeah, okay. Thank you, Arunji.
Yes.
Thank you. The next question is from the line of Parth Bhavsar from Investec. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity, and congratulations on good set of numbers. Sir, I had two questions. One, you mentioned that, on seamless and welded front, you are expecting approximately 50% incremental margin expansion from here on. So what would be, over what period can we achieve this?
See, for seamless, we have started achieving those margins, and in case of welded, to a good extent, we are, but I think from next quarter or first quarter of the FY25, I think we'll be probably achieving that.
Okay, so seamless, you are already doing that, and for welded, yes, from Q1.
Yeah.
Right. Okay. And sir, the other question, this mother hollow pipe backward integration that we have done. So how much of seamless pipes can we manufacture on the back of that?
See, currently, the capacity is there to which can cater to our to a good extent to our current manufacturing. But as we said, we are further will be starting 200 further metric ton by end of this financial year. So there would be a bit of gap in that. But if you see the anti-dumping, it is for up to 6 MPa size of pipe. Beyond that, there is no anti-dumping. So the leftover portion will be imported by us, wherein the anti-dumpings are not there.
Okay. Okay. Perfect, sir. Those are my questions. Thank you.
Thank you. The next question is from the line of Nihar Shah from Crown Capital. Please go ahead.
Yeah. Good afternoon, sir. One small question on our guidance, which we had given earlier in quarter two call, which was 35% revenue growth for FY24, but in 9 months we have seen around 54% growth. So are we looking at 55% mark for the entire year, because historically our quarter four is better?
Yeah, see, the guidance, I think, near to that only as compared to FY23, because range bound of 40 to 50% only, and I think we stick to that.
Okay, so 50% growth.
45 to 50%. Yeah, year on year.
Okay. And years going ahead for FY25 and ahead?
See, FY25 will be again a good year, because many of the capacity would be utilized to a good extent, I believe, in the range bound of 30 to 40% from FY24 if I compare.
Okay. That's okay. Thank you.
Thank you. The next question is from the line of Saurabh G. Jan from SJ Capital. Please go ahead.
Hello. Good afternoon, sir. Congratulations on a good set of numbers. So my question is regarding the market size of the SS pipes and tube industry in India. So what is the total market size as per you, and what is the market share?
Yeah, we don't have any perfect right figure, because there are many of the players who are not listed in the geography. So, but a tentative what we have worked out, annual demand of India is roughly in the range of 3 lakh tons, taking both seamless and welded, wherein welded should be in the range bound of 60 to 65%, and balance should be seamless.
So how much that would convert into value terms?
It can be depend on sizes, prices and grades and all, roughly mix and all. But at least I think at least more than 10,000 crores, I believe.
Okay, sir. That's it, sir. Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to management for closing comments. Over to you, sir.
I take this opportunity to thank everyone for joining the call. We will keep updating the investor community on regular basis for incremental updates on your company. I hope we have been able to address all your queries. For any further information, kindly contact SGA, the investor relation advisor for your company. Thank you once again.
On behalf of Antique Stock Broking Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.